Hey, I think this is Kitco, and they're talking about what happened to silver. I think this guy is either the CEO of the company. Anyhow, he knows what's going on in the market.
That is that rhodium on Friday night was bid 11,800. Today it's bid 6,200. It dropped $5,300 in the space of the last few trading sessions. But if we take that out of the equation, when that equity market got hammered on Sunday night and through Monday.
Now, there's three markets. There's the equity market, the ETFs, and I think the commodities, as well as the physical market. There's three markets where he talks about those.
What happens with the large portfolio investors where clients are generally not holding metal in physical form, they're holding it in the form of ETFs, and in some cases futures, which is even worse because now you're margined and leveraged, they're raising cash. So everybody is trying to raise cash, and so they're selling their metals to raise cash, and it feeds on itself. So you have the futures traders that are along the market. They get a margin call. They either meet the margin call or they've got to liquidate their silver to meet their margin call. So the downward spiral, as people try to raise that cash and meet margin calls, just feeds on itself.
Right.
And then you get to a point where, because there is no physical metal in the market right now, both the US Mint and the Canadian Mint are on allocation with some products anywhere from 4 to 6 weeks out at a minimum. You're looking at a situation where there isn't enough physical offtake to offset the selling of the ETFs and the futures because there's no physical product that's available to buy.
Now, just think about what he said. Because there's move on the market and the interest rate going down to 0.25%, and people are trying to raise cash, they wanted cash, they're selling off the ETFs and the commodities, silvers, to get cash because the interest is so low that the demand was just astronomical. And silver dropped down and then, 75-year low.
And so the overall demand supply side is in favor of supply as the ETFs and the futures liquidate to meet margin, and you get this spike down. Well, then you add to it the economic crisis where every supply chain globally is in serious trouble right now. Europe is probably already in a severe recession. Certainly Italy is. It is going to take months, and I think I'm conservative in that estimate, after this virus scare goes away and after everybody goes back to work, before this economy even starts to grab its footing again. This could be end of year before this happens. And in the interim, the unemployment rate at 3.5% at last posting, I would be amazed if it didn't post north of 10% somewhere within the next two reporting periods. I mean, there are massive layoffs, shutdowns. The state of Illinois has closed virtually every venue. The casinos in Vegas are considering closing within the next 2 days. I mean, the impact of the service people that are working in those industries is going to be huge. And the question is, does the government step up and support these people? But the demand side then from the retail sector is going to absolutely disappear. And that's been the driving engine of the US economy for the past 3 years. So this is going to get very, very bad before it gets better, in my opinion.
And I just want to, you said a lot of important points right.
So he expects it to get a lot worse before it gets better. Hang on to a rough ride.
There, Pete. If I could go back to one. So this rush to get cash and this panic selling, we're seeing gold kind of recover today from that. But how long is it going to take for silver? I mean, the gold silver ratio right now is just, out of whack.
Yep.
So is it going to take longer for silver to reap those benefits?
Well, I think psychologically, I mean, if they were to announce that the coronavirus has been corralled and the incidence of catching the virus is dropping, and if they came up with something like an antidote, that would be phenomenal. I mean, silver just in and of itself on a psychological basis is going to pop and probably recapture sort of the 85 to 90 ratio to gold. With gold, it's the same with the stock market. You get this one day where you get this rally, and then the next day it tanks. And silver yesterday hit a low of about 1160. It didn't stay long. It rallied as high as 1340, and now it's back down in the high 12s. Now, if this rally in the stock market holds and goes through tomorrow and rallies again tomorrow, I think that'll give some stability to the metals, and then I think silver will start to regain and probably at least sort of approach $14 again. But if it trades like the equity markets, where you have this one day of reprieve, like right now we're looking at about 700 points up on the Dow. Remember,
let's look and see where silver's at. Let's see if there's any record. Hold on. All right, so we'll have to wait about 3 hours. Looking at what the time here is, 12:16. We'll have to wait about 3 hours before the silver markets open. To be more exact, we'll have to wait 3 hours and 46 minutes or 45 minutes because it's about 16 after. So we'll have to wait almost 4 hours before the markets open, silver markets open. So we're looking at, I got a quarter after 12 Mountain Standard Time. We're looking at 4 p.m. Before they open on the eastern side of things.
We lost 3,000 yesterday. If tomorrow the Dow goes negative again, then silver going south of 12 is, in my opinion, a guarantee. And I think gold comes under pressure again and probably trades in the mid to high 14s.
I wanted to get, I wanted to also get your thoughts, Pete, on premiums we're seeing. So if you are one of the lucky few that is fortunate to land upon some silver, I've had investors write to me saying they're seeing premiums $5, $6, $8, $10. What do you make of that?
The way the physical metal market works, especially if you're talking about, let's call these core products, and let's call them the silver gold eagles and the silver eagles and the gold eagles, the maple leaf gold and the maple leaf silver coins. Let's say those are and let's add the buffalo sort of as a fifth product. The way the distribution of this market works is that both the U.S. Mint and the Royal Canadian Mint have what are called distributors. So generally, coin dealers don't have access to source, and they don't have allocation reserves given to them by these two big mints. So what you have is in the U.S. you have 4 primary dealers that have access to the U.S. Mint, and in Canada, including the banks, you've probably got maybe 8. Well, they all have their client base, and so when a primary dealer, and remember, this is on allocation. So the U.S. Mint ran out of silver eagles about 10 days ago. The Royal Canadian Mint has run out of maples, silver maples, and gold maple.
10 days ago. Now he did this on the 17th, but on the 7th then, or somewhere around there, 6th or 7th, they ran out of those coins. Wow, demand back that far.
Are on an allocation basis. So a dealer that normally would order 20,000 gold maples and 500,000 silver maples is maybe getting an allotment of 50,000 silver maples and maybe 1,000 gold maples. But he's got all of this demand from all of their dealers. So obviously the distributors, and I know it's not the best thing to do, but the distributors make their money when the sun shines, because under normal market conditions, they make very, very small margins to their dealers. So now they're pumping up to their dealers, and instead of giving them eagles at, 3.25%, they're selling it to their dealers at 4% or 5%. Well, the dealers have got to make money, so now they add on 2%. Because remember, this is a big, very intensive cash flow business. So as you know, a client comes in and buys gold coins from a dealer, the dealer has to hedge that. And, you know, there's cash flow considerations. So there's cost of carry on the inventory as well. So now the dealer adds another 2-3%. Before you know it, yeah, you're up at, you know, on a gold coin, you're up as opposed to maybe a $45 premium, you're closer to $85. And on silver coins, as opposed to a premium of 285, 3, 450 in that range, depending on the size of the transaction, you're up at $7, $8. But this too will all go away. Now, if you're lucky to be associated with a dealer that offers an alternative product, and again, I'm not trying to promote Kitco here. We offer trading accounts in silver, and we also offer a blockchain product in silver, where clients can park in silver. The product is totally protected. It's off balance sheet. It's fully insured, and buy the market. So you're in the silver price. And then once the product starts coming back into the market, you go to the dealer and you can swap out of that product into physical at premiums that are going to be considerably more attractive than they are today. So there are vehicles out there, you know, but if you're dealing with just Joe Blow coin dealer, those vehicles don't exist. So, you know, these guys are trying to make their $8-9 and, you know, and yeah, you know, it's like people right now selling toilet paper at, you know, at 500% over what it costs them. I mean, it's just
or Purell for $60 I saw the other day for this. Okay, I need to bring up the M word. I know we don't like going there, but I've just been, you know, inundated with so many emails about how this is a clear example of manipulation of the silver market. I wanted to address it with you. Since if you go on the silver blogs, people are saying this is a classic example. This is clearly what's happening. It doesn't make sense. What's Peter Hugg's response?
Okay, well, the only place, the only place that you could make that you would want to make, well, not the only place, but the primary place you would want to make an argument that a major player. And, you know, I'm not going to throw out the initials. Everybody knows the name, wants to short the market. So generally, their vehicle to short the market is the futures market. So they go in and sell silver contracts. And they sell the most active month. So now they're selling, you know, April's the most active silver month right now. And they go and they sell 500,000 contracts. Now, they're not selling 500,000 contracts into air. There's a bidder on the other side. So JP Morgan, I used the name I shouldn't have, and I apologize, but they're always the ones that are accused of this. So if JP wants to sell 500, you know, 5,000 contracts of silver, they can't sell it unless there's a bidder there. So there's another side to the trade that is buying the silver. I just think that there's an overwhelming amount of selling that occurred when this stock market crashed, because people have been, or investors, and not only individual investors, but also people that manage money, have learned over the past 4 or 5 years that any time a market drops like this, you have to be a fool not to try to buy it. And they've been right. You know, the market's dropped 10%, they buy it, and then it rallies 30, 40, 50%, and they look like geniuses. Here they've been trying to catch a falling knife, and every time they try to catch it on a bounce, the next day they get hammered. And now the market is absolutely terrified, and that generates a move into cash. If you notice that the stock market dropped about 3,000 points, almost 3,500 points, before it really had any impact on the metals, because people were buying the dip on the anticipation it was going higher. And then when it finally started to crash and people really started to get scared, they had to raise cash, because now they were in margin. They were leveraged, and what did they have to sell? So they sold their physical material, and there was a lot of selling in the ETFs from mutual fund holders of ETF positions for IRAs and in the futures markets, as dealers were trying to hedge this selling pressure that was occurring in the market, and they were raising cash.
Pete, would you buy silver here?
Absolutely. Now, I don't discount that.
All right, we're going to end it here. You'd be a fool not to buy silver to 75 years low. Well, Tuesday I'll buy some more silver. You'd be a fool not to. A fool not to. I'm taking my calculator with me. Anyhow, we're going to save this and go from there. Good day.